This is always a enormous intellectual risk to be on camera and say it's different this time, but you know what? I'm gonna do it. I do think it's different this time. We hit an all-time high of 108K in January, shortly after inauguration. Where are we today? 109. Did we get a little above it? Sure, we hit 10% above it. It leads me to think like new all-time highs are ahead of us. I think we're in an incredibly beneficial macroeconomic environment, a very unique one that I think the market doesn't even fully understand yet. I think part of that is evidenced by gold. Gold has been completely ripping. It is responding to a new fiscal regime, and I fully expect Bitcoin to follow that. Is Bitcoin going to drop 70% from here? I simply can't see it. It doesn't make any sense to me.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard. Today, joined by Stephen Lubka from Nakamoto. First, disclosure, I'm an independent director for Strive. So obviously, it being a Bitcoin Treasury company, might discuss some things adjacent to it, but really speaking in my own personal capacity. I invite skepticism anyway. So if you want to send skeptical questions, my DMs are open. So are Stephen's, I bet. But Stephen, welcome to the show. I think that a lot of our audience might already know you, but for those that don't, I want to kind of give a brief rundown of your orange pilling story and your Bitcoin journey up to this point.
Yeah, no, great to be here, man. I'm thinking back to the first time we met at a dinner in Los Angeles, and I mean, I know it was a dream of both of us to produce shareholder value ever since then. So it's just really exciting that we got here. No, all jokes aside, my name is Stephen Lubka. I'm the VP of Investor Relations for Nakamoto. We are a Bitcoin Treasury company, also that invests in Bitcoin Treasury companies and a few other angles that I'm sure we'll get into. I've been in Bitcoin for almost a decade now, which is crazy because time really flies. I got in the early part of 2017 and fell in love with it, was completely captivated by it. And after kind of the first year, I remember just thinking like, I don't really know how you work in the Bitcoin industry. I don't know how much there is a Bitcoin industry, but if there is one, that's where I'd like to be. And so that kind of took a couple different stages. I think most notably and most recently, I built and ran the private wealth team for Swan Bitcoin. I did that for 5 years. This was a concierge kind of almost financial advisor-esque wealth platform, very personalized, helping high net worth individuals get into Bitcoin, answer their questions, store Bitcoin. And, we helped almost $5 billion of allocations for high net worth individuals and ran that until recently joining Nakamoto, becoming very interested in the Treasury company landscape and very excited by, what David and Tyler had been doing.
Yeah, likewise on my end, very, very huge admirer of what Nakamoto is building. And I think that, let's get into kind of the Nakamoto journey so far and kind of what the thesis is for the team at Nakamoto.
Yeah, so I think the thesis for Nakamoto starts prior to Nakamoto itself. And so I'm going to talk about the roles that two of our executives played in in a different company. And so just for listeners being clear that like we're describing kind of pre-Nakamoto actions. And so David and Tyler, on top of Bitcoin Inc., which a lot of people know, Bitcoin Conference, Bitcoin Magazine, they launched a hedge fund called UTXO. And this had a couple different focuses throughout its history. But in the last 2 years, they started on a new kind of investment strategy that's probably well known to all of our listeners, and they backed the original check into Metaplanet. So when Metaplanet was there was this opportunity to turn it into a treasury company, and it was trading for under $20 million total market cap. It was tiny. And so UTXO facilitated that round. And, it's now a multi-billion-dollar company today. After the success of Metaplanet, UTXO started kind of doing a similar deal strategy in international markets all over the world. And so the basic thesis was, I think prior to Metaplanet, it'd be fair to say the market was unsure if MicroStrategy was just a Michael Saylor thing. There's a question of like, can it be replicated? Is there value in another one? Can you do it again? Or is this kind of like a one-time or winner-take-all market? And I think that question was, maybe people had different opinions, but that question was unanswered. After the success of Metaplanet, it's, I think, a lot easier to say, it's easy to say, that there's room for multiple kind of Bitcoin treasury companies. And we can probably talk a little bit later on like that term and what it signifies and where we actually see these things going in the long run. But yeah, so via UTXO, they backed Smarter Web, which was the best performing IPO in the UK of all time, and a number of other deals and treasury companies, blockchain group that have done, I think, extremely well around the world. And so after running that for a year or two, I think two, UTXO ended up as like basically the top performing hedge fund in the world over a 5 or 6 year period, And the idea was, after seeing the success of treasury companies broadly, it was saying, how can we scale this strategy? Like, how can we participate in this market, participate in this strategy with more capital, with more reach, with more access? And that was kind of the idea that formed Nakamoto. And so Nakamoto announced its merger early this year with KindlyMD. And we raised roughly $750 million in both PIPE and convert capital to kind of go into this merger, acquire Bitcoin, and start running the treasury company Playbook, investing in international first movers around the world, with the basic thesis being there are so many capital markets globally where there is no treasury company. And there are regulatory and practical barriers to buying Bitcoin, whether that's tax treatment, whether that's a lot of funds that have local mandates, funds which can only buy equities, and many other reasons, that there is a strong thesis for having an equity vehicle that is completely Bitcoin focused in international capital markets that lack one. And so we, raised capital, we completed the merger with the goal of kind of running the strategy globally, and some other things that I think have become more concrete since then. But I'll pause there.
Well, okay. So one thought I have is that I was listening to a space with Backed that he was describing the exact same thesis you just described, and I was like, wait a minute, you're just imitating Nakamoto, but sincerest form of flattery, right? That I think there is a serious thesis around kind of international opportunities, because there's capital all over the world that they don't really kind of have the freedom to just go anywhere in the world and say, oh, I'm going to buy a MSTR. And also that home bias advantage I've heard you and others describe of people want to have national champions. I think that was an interesting kind of evolution in human psychology.
One of the things people don't realize is that the rest of the world is a market roughly the size of the US. What I mean, if you take all of the kind of equity value of the global markets, it's roughly, depends on the year, obviously, but it's roughly the size of the US. So there's a large opportunity. And some of these markets, I think, are very compelling for specific idiosyncratic reasons. I think people are most familiar about that when it comes to Metaplanet, because they're aware of the tax treatment and the interest rate and the currency environment. And so the argument is that like a treasury company has a structural advantage in the Japanese market compared to other markets. And what we've learned over time is that it's usually more like that than not. So when you look at global markets, it's rare, or it's less common, that there's either not a tax scenario, a regulatory scenario, an access scenario, trapped capital funds. Generally, when you're looking at these markets, you're constantly finding these sorts of arbitrages that, equities are just treated better than Bitcoin at this moment in time. Like, maybe that doesn't last forever, but equities are what the system kind of runs on. Equities are what investors are used to. And I think you even see this with MicroStrategy, right? Like I point this out to people all the time. You get these reports of like some of the biggest pools of capital in the world buying MicroStrategy, right? Like sovereign wealth funds and like huge pools of capital. And then you could ask the question, well, why didn't they buy the ETF? The answer is because people are geared to invest in corporations, in equities. That's just how it works.
That and they want exposure to leverage as well, which an
Correct.
ETF typically either offers it in a kind of not so great long-term form, which is like those 2x levered ETFs where they have that decay from the derivatives activity. I actually heard there at the Bitcoin Treasuries conference in New York City, really great kind of way of thinking about the difference between a 2x levered ETF, where you have day-to-day tracking, Bitcoin's performance, but long-term goes to zero, versus a Bitcoin treasury company where day-to-day it's not going to track. It might sometimes, coincidentally, but it's over the long run that you would see outperformance from the fact that it's leveraged, it has differentiated approaches to increasing Bitcoin per share, and that kind of the price is going to oscillate around that.
It's funny you say this because I was having a conversation right before coming on here with an investor, and I made the comment that I think in many ways the MNAVs on treasury companies are a function of the current demand for leverage with Bitcoin. And so when there's a greater demand for leverage with Bitcoin, you would expect to see MNAVs expand. And when there was a demand, when that demand for leverage got lower, you would see it contract. And so obviously in the recent kind of last couple months, we've seen MNAVs contract. We've also seen Bitcoin go sideways to down. And so it hasn't been an expanding environment. And so in that, you would expect that this kind of demand for leverage is getting less and less, and you're seeing MNAV contraction. So we were talking about this, and he made the comment, well, MicroStrategy's like best performing period was up until the launch of options on IBIT. So like now we have options on IBIT, and this is this is going to compete. It's going to be a problem, XYZ. And will it compete for some kind of marginal dollars? Sure. Like it's, there's not going to be 100% of the flow. But my response to that was that these are very differently constructed forms of leverage. Like they're not the same. Options have time decay. They're not suitable for everybody. And it's kind of to your point that like you might be able to get that performance over short time periods, but you're very unlikely to get it over long time periods, especially as I think treasury companies continue to develop and evolve, creating more cash flow, M&A opportunities. And like this is an evolving sector where it's not just going to be sell equity, buy Bitcoin. There's going to be a lot more that comes. And I think when you start to look at that whole landscape and you start to look at that like whole playbook, it's a much more efficient form of leverage than options. And I think the market will eventually see that. And to your point, that plays out over longer timeframes, not shorter timeframes.
Yeah, the other I think huge structural advantage to the leverage in a Bitcoin treasury company that we've seen is the problem of liquidation, right?
Sure.
So people will go leverage long using a margin account at a crypto exchange, or doing 100x perps offshore or something like that, or now increasingly onshore apparently. But
Yeah. 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 Yeah.
that if Bitcoin goes down 20%, they're forced to sell their stack, right? That they have that liquidation trigger that people kept saying this about Saylor in the bear market. Oh, he's going to be forced to sell his stack, right? Like that was the FUD going around, and he didn't. And that I think caused a lot of confusion for folks of, well, how can this asset have a massive drawdown and not cause a liquidation? It's all in the fine print of the leverage, right? And getting to intelligent leverage. So like what do you think is intelligent leverage in today's environment, or and in general?
Yeah, and that is one of the key value propositions for a treasury company is that as a publicly traded entity, they can access a leverage profile and financial tools that you just can't access otherwise. And that matters. That matters a lot. And it is valuable. So the key for, I think, leverage to be defined as intelligence in this market, in Bitcoin specifically, it has to be non-callable. So there cannot be this function where Bitcoin goes down 20 or even 50% and the leverage gets called in. Because what investors want and what companies like ours want is they want to deliver a Bitcoin denominated return over time. So Bitcoin's going to go up X%, and you need a vehicle that will deliver an incremental return on top of that. And that's kind of how I think Treasury companies earn their keep. They need to deliver Bitcoin denominated returns, which I think is like an important yardstick for the market to start thinking in. Like as a Bitcoin investor, as a Bitcoiner, as somebody that's been in this space for a while, at some point, financial markets need to start thinking in Bitcoin denominated returns. And I value that Treasury companies are moving in that direction. Will it change a lot over time? Sure. But at least someone somewhere is thinking this way. So to intelligent leverage, it needs to be non-callable, which means it needs to be like longer term, basically. Like there's really no difference between like a liquidation clause and something you have to pay back in a year in certain cases. Like the scenario you need to avoid is Bitcoin has had a drawdown and the debt gets called in. That can't realistically happen. So you need something that's sufficiently long-term. Now, there's been a few different attempts at this, and I actually think this question of leverage has been the most challenging part to crack for Treasury companies. I would say, contrary to all the skeptics, Treasury companies are an aggregate underlevered, like across the board. They would all like to have more leverage than they currently do, generally speaking. MicroStrategy certainly would. If you could tell Michael Saylor that he could sell twice as many preferreds, 3 times as many preferreds tomorrow, he would say, absolutely. We'd love to get that up. The challenge has always been getting enough leverage at those terms. Originally, it was convertible bonds. Saylor has talked about pros and cons of that. Namely, there's going to be a lot of hedging in the equity, and also maybe like you kind of hit saturation a little bit, and how many people are willing to give it to you. And so I think his solution has been the preferreds, and the preferreds they fit this profile of intelligent leverage in that like it's completely non-callable, it's completely long-term, it's actually perpetual. There's no date whatsoever. And then it's just a question for the corporation to manage the payments. And there's even some flexibility on those vehicles. So anyway, it's a lot to say that like structuring this very long-term, non-callable leverage has been a key pursuit. But you can also think of that, and I'm kind of just saying something Saylor has said, but that you're extracting, you're refining, kind of like the Solomon Brothers in bonds. You're taking part of the return profile from Bitcoin and you're distributing it to bondholders. You know a heck of a lot more about this than I do. I know you've done some work on this, but that's kind of, I think, a very fruitful way to think about it.
Yeah. And so now at this point, you mentioned on the preferreds that it's perpetual. What I've seen people really struggle with is the thought that you're going to pay the dividend through issuance of common stock, and instead of like either operating cash flow, and I'm speaking generally, I'm not speaking about Naka or anyone, but that like there's this tension between how are you paying the dividends? Is it from operating cash flow? Is it from selling Bitcoin at a gain, or some other way? And that if it's from new investors, the prejudice is, well, that's a Ponzi. And so, and Saylor has presented, I think, in many quarterly presentations that that's kind of the intent, is that they're going to use the ATM on the common stock to pay dividends when that's favorable.
Absolutely. So, I mean, let's even make the scenario a little harder. Let's assume MicroStrategy is trading at a 1x MNAV, so they have no benefit of a premium. And they have preferreds, and they pay the preferreds with the sale of the common stock at par or at NAV. They're paying it with dilution. Like, that's not inherently good or bad in a sense. It depends on how does Bitcoin perform. If Bitcoin goes up 20% a year and you pay the preferreds with 1x NAV dilution, it performs, right? I'm not saying that's as good in any way as paying it with an ATM that's at a premium. That's obviously way better. But I think people get confused around this because like dilution is kind of just a different way to use the assets of the entity to pay their liabilities. And that may be less favorable, or investors may choose they don't like that. That's fine. But that's what's happening. Your alternative is obviously selling the Bitcoin, but you don't want to sell the Bitcoin. The whole treasury company model has two key assumptions, in my opinion. One, Bitcoin continues to go up. If Bitcoin doesn't go up, the model obviously has key problems, right? You have to think that there is a lot of value in being not just long Bitcoin, but levered long Bitcoin, right? That's a basic assumption. And the second is that public corporations have structural capital advantage over non-public or private individuals and other investors. If both of those two things are true, if Bitcoin continues to go up over time and publicly traded entities continue to have access to financing options that individuals don't, the model is intact. It's just a question of what is the performance, where does that go, and so on.
So at this point, when we look at the demand for leverage, right? If we look at MNAVs, it seems like we're in the past 6 months more compression on MNAVs than expansion, and that is that just a derivative of Bitcoin's price going sideways? Or do you think that there's other evolutions in the marketplace that are causing this compression?
Yeah, so I think it's a few factors. I think probably the largest factor is Bitcoin going sideways to down, right? There's been no, it just hasn't been moving aggressively higher. I would have a very high confidence that if Bitcoin were to go up 30% next month, that MNAVs would be higher than where they are, probably materially so. So I think it's a huge variable. Do I think that's the only thing? No. I think that we're the most recent timeline, the most recent point in time was this period where treasury companies were going up hundreds or thousands of percent in a short period of time. And so if that's your high watermark, right, do I think there's obviously some distance between here and 7 to 10x MNAV? Yeah. Do we get back there? It's clearly going to depend on market conditions. I don't think that should be a given. I don't think as an operator or an investor, you should be operating as if that's a given. And yeah, we're definitely going back to 7 to 10x. Do I think that as long as Bitcoin heads higher, as long as kind of volatility increases, that the MNAVs will expand from here? I do truly believe that. I also think that the market, I think this kind of happens with innovation and with market cycles where you had kind of like a V1 model, which is like where we're coming from. And that was basically like buy Bitcoin, sell equity, take on debt. That's basically most of the model. Not to say that that's always easy or that doesn't take immense operating prowess and fortitude and intelligence. I'm not trying to downplay in any way what it took to run that, but that was like V1. I think the market wants to see something resembling a V2 coming out. And I think that at a point where that happens, I think investors become a lot more enthusiastic. I think that V2 broadly would be defined by more active, whether that is cash flow, whether that's yield, whether that's M&A, whether that's just other ways for these entities to be more active compared to issuing stock and buying Bitcoin. And there's probably more ways to do that than I can easily even think of right now. I think that's the landscape. And I think it's something we're thinking a lot about, thinking and doing a lot about, is there are many other opportunities to actively deliver more value and to shareholders, ultimately with the pursuit of buying more Bitcoin. And I think it's not just us that's thinking that way. And I think as the market and as the kind of higher quality operators start to show their playbook and show their hand, and actually we are able to generate cash flow. Actually, we are able to do these other moves besides these solely ATM and common stock. I think investors will really like that. And I think that's part of market cycles. Like, we had this huge expansion. Very few people participated in that market, right? Some people, try to talk about tops and all that. If you weren't like a MicroStrategy investor on Bitcoin Twitter, like, you were not riding Smarter Web up, or you were not in Metaplanet, generally speaking. And I think there's been a persistent interest in this model, actually one that's been surprisingly robust in my experience. So while obviously like people on the internet, struggle with volatility, I found investor demand behind the scenes to be undeterred and robust, and that there is a more long-term conviction in this model. And so I think that plays out in a second iteration.
So you struck out those two models, and I think that that's right. Coming from my background, I want to add a third, which was Bitcoin mining, which I would actually put as like V0.
Sure.
The initial kind of concept, which I think that the limitation that ended up happening there was about how capital intensive
Correct.
it is, and that then the pendulum swings in the other direction of, okay, well, make sure all the capital is in
Zero
Bitcoin.
capex, completely
Yeah,
get rid
yeah,
of it.
exactly.
Yeah.
No mining rigs, no nothing. And then V3 is kind of the synthesis of have an operating business that's not capital intensive, that is not going to tie up so much, and kind of make it more challenging to kind of communicate the story, right? But really focus on Bitcoin, having Bitcoin on the balance sheet, with a kind of a more service operating business almost.
And I think 100%, and then that's completely right. I've been asked the question on podcasts of like, well, why didn't the mining companies get an MNAV? Why didn't the mining companies
They
turn it?
have one. Yeah, I'll point out. I'll defend the mining companies here, especially recently. They've been on a good run, but it seems like that's more HPCAI than Treasury company MNAV expansion.
Yeah, agree 100% there. I think they're doing great, but it's an AI story more so. But either way, in the
Yeah.
past, why didn't the mining companies become the treasury companies 2 years before MicroStrategy, ever came into existence? And the answer is exactly what you said. It's because they were so capital intensive, and there was this constant trade-off between a very aggressive capex market to keep up with your competitors. Like, you can't even tread water in the mining business unless you're constantly deploying new capital. And then that's competing with your Bitcoin buying capital. So it was it was a challenging model for this sort of thing. I like your example of like, so then it swings the other way and it just completely get rid of the whole thing. This is a pure acquisition vehicle using financial markets, or it's mining financial markets. But I think we see it the same way. Where this is going to settle out is a combination between these two things. And I think the best combination there, outside of some more active strategies outside of this, is businesses that synergize with the Bitcoin treasury, right? There's a point to it. You want to have a business that actively utilizes the Bitcoin on the balance sheet to drive shareholder value and to create cash flow. And so this is an actual business, but it's also a business that has a primary goal of accumulating a Bitcoin treasury. And so it's saying, hey, the primary benchmark, stacking sats, buying Bitcoin, this going up forever. But we know that we're going to be able to do that more effectively if we have growing cash flows and we have an operating business and we have something that synergizes with this. Because there have been companies that had an operating business before, but it was a shrinking operating business and that kind of had nothing to do with Bitcoin. And that's a bit of a different model. I think if a treasury company can demonstrate synergy between the treasury and cash flow via an operating business, or like market neutral, like delta neutral yield, or some conservative ways to kind of, again, like prioritizing on keeping the Bitcoin, but if you could generate 1%, 2%, options market sort of stuff. I think that starts to get a lot more interesting. And most of all, I think it starts to appeal to normal investors more, where there's all these people on the sidelines, you've had debates with them, that the lack of cash flow, the lack of an operating business is a huge impediment for them to understand this model. They've clearly been wrong in that regards because the model has been extremely successful. So it's not in any way yielding to that point. But I think there's no reason you can't have both. There's no reason you can't have a growing operating business that has something to do with Bitcoin and a growing treasury.
Yeah, I agree. So now, do you think that this is the final form, right? Is there going to be a fourth iteration on this? People have said like, oh, they're going to become central banks. They're going to become. So I'd love to hear your perspective on that.
Yeah. No, I don't think this is the final form. I think we are still very early in this trend. And like, let me use a different word to describe it because I think people get tripped up with the phrase treasury company. We are in the capitalization rush for Bitcoin financial institutions. That's what's happening. If you think Bitcoin is a globally important asset in the future, it doesn't even have to replace fiat, but like it's just a systemic, globally important asset that is used all over the world, financial institutions, trade settlement, all these sort of things. You need financial institutions that A, touch it directly and are comfortable doing so, and B, so the preferreds are an example of a financial instrument which only exists because there is a counterparty holding tens of billions of dollars of directional risk on Bitcoin, right? If you don't have some entity that says, hey, I'm willing to ride the volatility on tens or hundreds of billions of dollars of Bitcoin, only that entity can issue that preferred product that Saylor has done. Do I think that's the only product that will come out that is effectively collateralized or enabled by a large Bitcoin balance sheet? No, absolutely not. I think there will be many more of these things would come. And so in this kind of Bitcoin future, you need large counterparties that hold a lot of Bitcoin and then use that Bitcoin, deploy that Bitcoin, leverage that Bitcoin to achieve aims in the financial markets, to issue products, to issue services, to facilitate international transfers, like all these sorts of things. And I think we're in the capitalization phase for the future, those future companies. Now, is everyone that's here today, is every single treasury company in the world today going to be part of that? Absolutely not. Will winners pull ahead? Will there be acquisitions? There'll be consolidation? Of course there will be. Are we a good bit away from that kind of end game? I think so. But you're going to need financial institutions that have Bitcoin DNA, that hold Bitcoin, and that use Bitcoin. And I think that's the right pathway here.
Yeah, I think that makes a whole lot of sense. And so curious to hear kind of what your sense is of Saylor announcing at the conference that he thinks this is like year zero of the industry, and that before this year there wasn't a clear like industry or man, yeah, people didn't think about Bitcoin treasury companies at all. I remember in July or around the Nashville conference in 2024 that Metaplanet had a great run up, and then they crashed. And I remember people kind of like dancing on the grave and gloating and saying, "Oh, look, Metaplanet, these treasury companies, or I don't know what terms we were using back in summer 2024, are not going to be able to replicate what Saylor accomplished." I thought to myself, well, look, like there's Dylan LeClaire involved, and I know Dylan. I've known Dylan for a very long time. He's one of the most intelligent Bitcoin finance minds in the world, and I remember, kind of taking a look at it and thinking to myself, well, it's not going to go away. like worst case scenario, they kind of go sideways until there's another run up. But that then 6 months later, 9 months later, everybody's like, oh, aside from MSTR and MetaPlanet, none of the other treasury companies are going to work out. And
Yeah.
so they're going to keep adding ticker symbols to the list of exceptions to the rule that Bitcoin treasury companies don't work out.
I've seen the same thing of like there was a time everyone was super skeptical of MetaPlanet, and now it's just like a given. It's MicroStrategy and MetaPlanet. Well, how curious that another name got added to that list. Is it year zero? I think that was the original
Yeah,
question.
yeah, yeah.
I wrote a thread when I joined Nakamoto. I was thinking a lot about treasury companies at the time, and obviously made a big kind of career move and personal decision. And so here's my analysis of it. Because you have this question, when does this turn from MicroStrategy to an industry? There's a transition there. It wasn't always that way. So in my opinion, there's not an industry until the success of MetaPlanet, end of 2024, beginning of 2025, right? Because before that point, even people weren't even really sure that MetaPlanet was going to make it. It was like you had true believers, obviously, but like it wasn't a given. It wasn't common knowledge. And so it wasn't until I think this most recent treasury company kind of, I don't even want to call it a cycle, but like, kind of bull market, that I think it was proven. Before that, it's just Saylor doing MicroStrategy. And people don't even know where he's going to get to, right? That was very much like, R&D. Like it was a very early stage of this. And then it's not actually proven until MetaPlanet hits those highs. And then maybe 2 to 3 months later, you have Smarter Web kind of do a similar move. You have, and now there's like 4 or 5 of them or more that are like really on people's minds. And that was the beginning of 2025. That is the moment that I would say there was an industry. And what other evidence is there to that point? Well, it's right around that time. That's when the 3 kind of large US deals get announced. You have 21, you have Nakamoto, and you have Strive. And these are these kind of 3 big kind of US players that are saying, hey, we want to be in this market. We want to participate in this market. And that all happens around the same time. So I think like that is really the starting line. If we're thinking of this as an industry, I do think of this as an industry. And I think when you look back, while I don't think we can perfectly predict where it's going to go, I'm highly confident it will go somewhere, and there will be highly robust Bitcoin financial institutions that emerge from this, and that will look like the starting point, in my opinion. So I could understand why Saylor says that, and obviously, like that's what he would like to believe is true. That's what I would like to believe is true. But I do believe it's true, and I do think that this is a I think there's certain ideas that you can just tell have staying power. You know what I mean?
Yeah.
They're not like flash in the pan sort of things. And this has always struck me as one of those, and is one reason I took the personal leap to work in this industry. Is I think a Bitcoin financial institution is something the world will have to have.
Yeah, so if I think we completely agree that massive amount of capital is still to flow into the industry. It's still such a small percentage of the overall financial system, and that then we intersect that with the Bitcoin price and the 4-year cycles. Do you think that we're in a super cycle now, and that winter is not coming?
So this is always a enormous intellectual risk to be on camera and say it's different this time. But you know what? I'm going to do it. I do think it's different this time.
Do the
Now, now, why would that be? Well, I think in one part, this year wasn't a bull market. Let's be clear. We hit an all-time high of 108K in January, shortly after inauguration. Where are we today? 109. Did we get a little above it? Sure. We that 10% above it.
Went below it too.
Yeah. And it's sideways. We've traded sideways all year. This wasn't a bull market. Like there's no way to look at this and be like, this was a bull market. Now, some people get confused on that because if you measure from 2023, we're up a lot. And that's true. Bitcoin's done well. But why was it up in 2023? It was up because of two key reasons. One, the launch of the spot ETFs, which not only were the things themselves, but were the signpost that the regulatory regime was cracking. The winning of the Grayscale lawsuit was when that started. Now, is it completely fundamentally merited that Bitcoin would reprice on that news? Absolutely. That was game changing. It was direct capital flows that came in, and it was the sign of the end of the post FTX regulatory hostility. So, of course, Bitcoin went up then. And what was the second thing that happened? The second thing that happened was the election of Donald Trump. Was it completely appropriate that Bitcoin repriced on this administration? Absolutely. Those were two fundamental drivers that just simply said Bitcoin should be higher. And so that happened. But we did not go into this sort of like reflexive bull cycle on top of that. And that's fine. Actually, I prefer that because it leads me to think like I actually think new all-time highs are ahead of us, even Q4 for Bitcoin specifically, I'm talking. And I think we're in an incredibly beneficial macroeconomic environment, a very unique one that I think the market doesn't even fully understand yet. I think part of that is evidenced by gold. Gold has been completely ripping. It is responding to a new fiscal regime, a new monetary regime, and I fully expect Bitcoin to follow that. So it's is there any like is Bitcoin going to drop 70% from here? I simply can't see it. It doesn't make any sense to me.
Yeah. So my price range for the end of the year is 180 to 220. And I was pretty confident about it 3 months ago. Now I'm thinking, do I need to adjust that downwards a little bit? But I trust the green candles, but I'm just now thinking that it's going to be a longer cycle, which is great for Bitcoin. But it also means less upward volatility in the short term.
It's just, yeah, the volatility has gone down. I actually have made the joke that we invented treasury companies because Bitcoin wasn't volatile enough anymore. You had a
You're
bunch
right.
of
Yeah.
Bitcoiners that have been in this thing for a long time, and now Bitcoin is like a seasoned macro asset. It performs great, but it's a lower volatility, and so like, man, where's that early volatility at?
Yeah, and I think that on both ends, right, upwards and downwards, and for folks who have survived several Bitcoin bull markets and bear markets, I think that there's a point where you're just desensitized to it, and you're just looking at it analytically of like, what should I do today, versus like having a panic attack or being euphoric.
It absolutely. But it's I just see everything that's happened in this kind of segment of the industry as like treasury companies went all the way up to 5 to 7 to 8, 10x MNAV. And then they've contracted along with Bitcoin. The whole swath of them for the most part is trading between 1 and 2. And that's the kind of consolidation the market is digesting. Just all the moves and all the new information and new companies. And as Bitcoin starts to move higher and certain players in the industry start to differentiate themselves as like kind of having a leading narrative, doing some new things, like who's going to execute on like the new frontier. I think the market then rewards those people and rewards the segment. And that's just what we've been through. I know there's been a ton of volatility and like it's never a simple matter, but I think we also went like thousands of percent to the upside.
Yeah, now it's interesting too because I haven't seen a direct like causal or correlation between uh, a compression of MNAVs, Bitcoin treasury companies kind of in the red, and then Bitcoin price also being in the red. So there's not like a mechanism, a transmission mechanism. In the opposite direction, there
Right.
is, right, where treasury companies go up. So obviously they're going to have the financing to be able to go buy more Bitcoin, and they'll bring Bitcoin up. But on the way down, the treasury companies don't sell. And so it's
Correct.
just the equity premium that is compressing.
Yeah, and totally. And I mean, this is a thing that like this argument was going around a lot on Twitter, I think a couple months ago, but it's like, if anything, you could make the argument that treasury companies will shelter the downside volatility from Bitcoin, the spot asset, because they're buyers and not sellers. And like it's kind of the equity premium is where the contraction takes place, not the liquidation of the assets. And I was very vocal a few months ago that like that should be your base case. Your base case should be these companies don't sell, the equity contracts, Bitcoin has lower downside volatility. And then once Bitcoin starts moving higher again, they kind of kick into the upside. It's not a free lunch because, there's obviously impacts across the equity stack, but like from Bitcoin's perspective, it is really, really just upside, unless we got to a point where one of them had to sell, but we haven't seen that. And, people have also had a lot of concerns around like them getting over levered and like blowing up. And like we said at the beginning of this call, like everyone would like more leverage. I think everyone is under levered.
Yeah, I agree that it might be a sign of a top when things do get over leveraged, but we're so far from that today that part of the value or part of the thesis for investing in a Bitcoin treasury company is that it is levered. Otherwise, you can just go buy IBIT. Um, and I think the other kind of trend has been I think that the froth and toxic assets side of this is more likely to be in the DAT space,
Sure.
digital asset treasuries. So, what do you make of kind of the non-Bitcoin companies that are have been announced and kind of entering into this kind of without naming names at a high level?
Yeah, let me actually answer one side point that I forgot to
Yeah,
get to, and then we'll talk about DATs.
yeah,
One of the reasons I'm so bullish on growing cash flow and operating businesses' revenue is from a per share basis, from the ability to do accretive dilution. There's not a difference between an MNAV and a PE ratio, right? All that matters is what is the share price in relation to how many Bitcoin? How much over the value of the Bitcoin is the share price trading? And so one of the best ways to get some more MNAV is to have revenue that gets valued and grows. And I think there's multiple levers you can kind of work with to get that share price higher and actually be able to like synergize with your Bitcoin stacking. And so I wanted to throw this out before that just like there's a lot of different ways to buy more Bitcoin. And I think that the industry will continue to reward innovative and creative operators that realize that, like, I'm just repeating myself, but there are many different ways that you can add more Bitcoin to the balance sheet on a per share basis. Wanted to throw that out there. On DATs, I mean, it's so notable to me that like they struggled with an MNAV out the gate. When these things came, I mean, they were going sub one or slightly above one, while many of the Bitcoin companies were much higher. They were the first to compress. I'm obviously like completely skeptical of the thesis, right? I think what happened is a bunch of guys saw how well Bitcoin treasuries had been doing. There was really no major altcoin narrative at that time. Like it was not looking good. And I think people tried to kickstart the engine with these companies. The problem is like I think a lot of them weren't structured. There's a lot more skeletons in the closet of how they were structured and the actual like dynamics. Also, like a lot of the theses, I'm personally, I'll just speak for myself here. For example, are stable coins going to get a lot more adoption over the next few years? Sure, of course they are. Like it's clear that the US is leaning into that. Does that result in direct value accrual to ETH the token? Barely at all, right? And so some of these narratives that have gotten thrown out there of like, oh, well, the Genius Act and like the success of stable coins and like, the Treasury is going to like sell a bunch of debt via stable coins. Yeah, that's true. That will happen. Is that what you need for like a structural altcoin long thesis? No, not at all. In fact, the opposite is happening where all the successful stablecoin players are launching their own chain to get
right.
off of the infrastructure that they're paying a tax on. So, stable coins are not a long thesis for DATs. And ultimately it's just Bitcoin is a treasury asset. Like Bitcoin treasury companies exist because people see Bitcoin as a treasury asset. Its treasury assetness preceded the concept of a treasury company. And the same is not true for these other assets, in my opinion. People weren't like, oh, wow, what a great treasury asset. Let's do it. It was, wow, look at how good treasury companies are doing. Let's pump this token.
Okay, so my counter on this would be just that there is leverage on altcoins at exchanges today, and so wouldn't they just benefit from that those same dynamics we were talking about of just better quality leverage, um, and that the thesis is kind of that if you're a long-term investor that Bitcoin's going to do well and most altcoins are not, but that it's shifting the altcoin casino from the crypto exchanges to Wall Street.
So, I mean, are these structures better for altcoin investors than 20x perps, 10x perps? Absolutely. Yeah. I mean, there's no question. Like, my point is not that there are no marginal improvements or no advantages to the structure. In fact, there's many advantages in a certain way. Something I found funny is like the early contentious point between Bitcoiners and altcoiners was these are unregistered securities. Well, what are DATs? Well, they're registered securities. You've registered the security. Are there benefits to registering a security? Absolutely. There's much more visibility. There's much more regulation. It's a lot more transparent for shareholders that do choose to participate. So yeah, my comment is certainly not that there's no kind of incremental benefits. And I guess if I were to like steelman it, and I was trying to kind of create my best argument in favor, I guess it could create a better vehicle for speculating on altcoins. And so for people that really, really want to speculate on altcoins, like, I mean, it could be a market capture for Wall Street and for, certain players. And maybe that's a more secure vehicle than, setting up the perp account. So I could probably be persuaded of that.
Yeah, so I think the value there accrues to the exchanges that are getting paid all the fees on all this trading. But I think that there's also the argument I've heard, and you mentioned it, that um, these the Bitcoin treasury companies became more attractive and will continue potentially to be more attractive as Bitcoin's volatility goes down. They're able to lever up and be more volatile, and so kind of maintain that equilibrium level of volatility that seems to be a sweet spot for a lot of people, and that actually takes capital away from altcoins. Where if we think about altcoins historically of being levered Bitcoin, right, that they outperform in a bull market. Do you think that there's that dynamic that's going to kind of keep pushing Bitcoin dominance up?
So that was something I was very vocal on that in kind of the like January to May region. It seemed very clear to me that the Bitcoin treasury companies were sucking in all the speculative capital and the altcoin market was really having a hard time. That only kind of changed when the DATs came to market, which again, I think it was really they had to kind of get something there because there was a huge drift of capital. But again, I just think Bitcoin is going to be a much better vehicle for that sort of strategy. And I think, yeah, I mean, I think like even if and when Bitcoin volatility like annualizes at a lower rate, like, yeah, it gives you can take on more leverage. You can do certain things. One of the things I think of is like when most people put on a gold position, they're putting on a levered gold position, right? Or when most people put on a treasury position, they're putting on a levered treasury position. I mean, most is incorrect, but it's common that like when an asset's volatility goes down and you still have a really constructive thesis on that asset, you just want to see a little bit more of a return profile. That's where people put leverage on these positions, and that's what people do. And so I think like, I think you could have an incredibly constructive Bitcoin price target and price thesis over the next decade or 2 decades, and you can then dial up or down the leverage based on the actual like volatility on the way there. And it's really just like how much that is like, you know, I mean, it's really just the actual volatility. How much is it going up and how much, or like how much is it varying? Not how high it goes. I mean, it could go up 20% a year or 30% a year. That could be very steady with small drawdowns. Like that's kind of how it's been. The drawdowns have been a lot smaller. And so I think like treasury company operators can come into that space and can kind of, again, you know, it's the rise of Bitcoin linked securities. Like that is what is happening. And I think there will be so much more of that. We live in a world where most of the value is in securities. And this is an opportunity to bring Bitcoin into the securities landscape. And you have to do that because all the money is not going to leave securities and just like pile into Bitcoin. Like that's not going to happen. There's no way that's going to happen. The whole system is set up for that not to happen. So what you need to do is you need to bring Bitcoin into the securities landscape. And as with like ETFs, for example, how many different types of ETFs are there? Like income ETFs, thematic ETFs, 2x, 3x levered ETFs, and so on. There's a very wide, like the securities world is vast. It's massive. And Bitcoin has penetrated sub 1% of that. And I would bet almost anything that penetration goes higher.
Yeah, I agree. Do you think that there's going to be headwinds in the form of a bit of an allergic reaction from TradFi? So we saw the S&P deny strategy going into the S&P 500 index. Um, we saw Nasdaq coming out and saying, "Hey, you know, you really need to have more shareholder involvement in your pivot to becoming a treasury strategy." You know, to new entrants. That there's going to be kind of pushback from Wall Street, and especially, you know, at some point it's going to get on Elizabeth Warren's radar that Wall Street is levering up on Bitcoin, and I can imagine her having a speech at some point. But um, yeah, do you think that there's going to be pushback on this?
I mean, I wouldn't be shocked, but I kind of don't think so. Not in a material way. Like even the examples. So like, let's deal with the two examples you just put forward.
Yeah.
Um, I never thought for an instant personally, and that's not dunking on anybody that did, but that Saylor was going to get in the S&P on the first try. The simple reason is there's a discretionary committee. And there's just no way that was first pass going through. There's so many differences to the model. It's not just Bitcoin, it's the whole business model. And, you know, I mean, it took Tesla a bit, it took Robinhood a bit. Like, it's even for companies that are pretty standard, they don't get in right away. So that to me is almost like a non-data point. Like, you'd have to see a lot more rejections, in my opinion, to really have like oh, okay, maybe they're just like fundamentally opposed. And then the scrutiny on the shareholders or like the shareholder votes, I mean, I thought that was totally reasonable and appropriate. It was like every week you have some random company, some random token, and like the least you could do is say, hey, let your shareholders vote on it, right? Like that's not like a draconic, crazy regulatory regime. Now, one of the reasons I'm actually kind of pushing back on this is actually, in my experience, I talk with a lot of analysts as part of my job. So I run investor relations, and so I'm talking to a lot of the investment banks, I'm talking to the research teams and all that. What I have found is that this model makes more sense to them than Bitcoin does, like way more sense. The problem with Bitcoin, I'm not saying it was a problem, but like, is that it didn't have cash flow. You couldn't model it. There's no, and I agree with that. That's a correct statement. You can't really model it. It's just like, but that's more of a like, criticism of the way models work rather than a criticism of the way Bitcoin works. It's just like you could have a like, we expect demand will go up over time. You could have a direction. You can come up with a standard investment thesis for why Bitcoin goes higher, but you can't say what its fair value is, in my opinion. It's very hard in traditional terms. And so Wall Street really struggled with that. Now, treasury companies are infinitely more modelable. There are growth rates, there are debt loads, equity sales. You can watch the balance sheet fluctuate. They trade at a multiple. It's an MNAV, not a PE, but like, what's the difference in certain ways? And so when I've spoken with a lot of these people, a lot of these analysts and people at investment banks, They've always said to me, this is mining 2.0. They got mining. Mining was simple. There was cash flow, there was money raised, there was debt, there's equity, power costs, whatever. They understood mining. Mining tapped capital markets heavily. They're talking about treasury companies as mining 2.0. It makes sense. They're using public markets. They have metrics you can evaluate them by. You can decide, is this a good company to issue, convert to or not? So I think it's actually way more intuitive. I think they will get it. Also, the simple truth, they're able to make way more money from it because there's all these securities offerings. There's ATM programs, there's converts, there's pipe raises, there's all of these things are a way that they can actually profit, which they couldn't with Bitcoin. The simple truth is like they couldn't. And so I actually think it's something that makes more sense. And they're more incentivized to like try to understand, especially because if like your bank isn't doing it, and the next one is, well, they're out competing you in this domain, right? So just to stay competitive within your own little bubble, you kind of need to know what's going on here. So I think there's a lot more engagement. I think there'll be a lot more engagement and resistance. And then finally, I think we're in a very different regulatory regime. And I think we stay in a very different regulatory regime for at least for this administration.
Yes, and it seems like at some point this becomes too big to reverse in a future administration, right? Which I think was the case with Bitcoin mining itself.
Yeah.
That even with Biden not being a huge fan of it later in
Yeah.
his administration, couldn't really do much against the industry.
That's the power of having a very supportive administration for 4 years is you can make so much progress during that time that it's just completely impractical to reverse that in the future. The ultimate protection for Bitcoin investors is just more people owning Bitcoin. The simple fact is if 30% of Americans have 5% of their net worth in Bitcoin, there's nothing you can do there.
Right. And then we even saw a senator lose his seat, arguably due to this issue, and Bernie Moreno replacing him. So I think that the pendulum is swinging in that direction. Before we wrap it up, this raises kind of a philosophical question for Bitcoin, which is that so much of the emphasis has been on Bitcoin censorship resistance, self sovereignty, decentralization. But at some point, if you're winning so much on the political landscape, and these tail risks of government seizure become more and more science fiction and less kind of recent history of Executive Order 6102 or whatever it is, how do you think Bitcoiners should be looking at the Bitcoin Treasury space in a rational manner in that context?
Yeah, great question. I actually wrote an essay on 6102 2 years ago. My stance is that like most people completely struggle to understand how radically different that political environment was. FDR was like a borderline closest thing to a dictator that America has ever had. He had striking, sweeping, enormous executive power. And ultimately, gold had a direct causal relationship with the dollar. So there was a very strong need. I couldn't see the modern American era as more different from that. So anyways, little kind of throw that pin out there. But I think the simple truth for Bitcoin investors is that there is no scenario where Bitcoin wins and there aren't Bitcoin securities. You need to just understand that's not a real scenario. If Bitcoin is successful, it will be securitized. There will be corporations that hold it. There will be ETFs and yield products and financial service, all these things. Like they will exist. You cannot scale a global monetary asset to global dominance or widespread success and not have the financial infrastructure engage with it. Like you just can't. This thesis that like you could get complete mass global adoption on a like grassroots, like peer-to-peer, it's not how the world works. That doesn't mean Bitcoin loses its benefits or its essence or its spirit or its culture or anything. It just means that like at a certain point of success, like the financial world's going to pick up on it and it's going to say, hey, we want to play too. That's a marker of you winning in a certain sense. Now, does that mean there's not any risks and there's not any concerns? No, of course I'm not saying that. But the yardstick it shouldn't be like treasury company or no treasury company, Bitcoin security or no Bitcoin security. It's more just you need to start thinking about what are the types of Bitcoin securities? How should these things be structured? What is the best way to do this? Those are the questions to ask. One thing I've said is that I would rather have Bitcoin treasury companies run by Bitcoiners than by random kind of executives, right? I think that's a question you can ask. That's a prerogative you can have of saying, hey, if these things are gonna exist, let's at least have people that really understand and support the asset as representatives in this domain. That's something I believe, people.
Well, I think it's impossible to not employ Bitcoiners and pursue this strategy, because you have to have people who are going to
Oh,
essentially absorb the volatility, on a psychological level
oh,
that has prevented all the mainstream corporations from investing in Bitcoin over the past 16
yeah.
years. Right. So,
I mean, it's why the Bitcoin podcasters were the natural choice. I mean, this is a cohort of people that every day got up and explained Bitcoin, no matter where the price was at, and it's a perfect profile. I'm being a little tongue in cheek there for new shareholders, but your point is completely sound. And Bitcoin, it's a unique thing, and you need people that understand it. You need people that can communicate about it. And I actually hadn't really heard your point before, but yeah, you need people that are already hardened to the volatility, because there will be volatility. In fact, like what a treasury company is a higher vol instrument. That's what it is. It's saying we want to have volatility on top of Bitcoin. And that's always going to be in both directions.
and I think that what anchors you in those times of volatility is the fundamentals, right? Of the like understanding the fundamental value of Bitcoin is not impaired by it being down 80% over the past 12 months, or all those bear markets. That understanding of the fundamentals comes from doing a lot of podcasts, listening and speaking.
Absolutely. Absolutely. And it's also like, yeah, it's understanding like, has it changed or not? If it hasn't changed, this is just volatility. Like, have the fundamentals changed? No. And again, I come back to two fundamentals for treasury companies. One, do we expect Bitcoin price to keep going up over time? Two, do publicly traded corporations still have access to financing mechanisms that individuals do not? As long as those two things are true, in my opinion, the fundamentals haven't changed. I don't expect either of those to change anytime soon. Can it compress? Can it expand? Can it do all these things in the meantime? Sure. What is the value that you bring as an operator? This is my thing. So I hope for kind of all the people on the internet, this is the one thing I would communicate that I think if you haven't run a business and you haven't run a Bitcoin business, but a business in general, that it's most difficult to understand. The value that you bring as an operator is not that like you always have the ability to make the successful and right decision. And that's not because you make a mistake. Exactly. It could be because you make a mistake, but it's also because like when you're running an organization, your workspace is constrained. You can't do anything. You can do what is in front of you. And so as an operator, your key is picking the best option from the options that are available at the right time with the right effect, and doing that consistently over time, right? It doesn't mean that the world is available to you. It doesn't mean that you can do anything. It means that you have to just wake up every day and you need to look at the environment that you're actually in and the options that are actually available to you. And you need to incrementally make more good decisions than bad decisions. Like that is how you kind of deliver it over time. None of the treasury operators could really do anything to stop the MNAV contraction this last 3 to 4 months. Like there really wasn't, I didn't see any structural move that anyone did that prevented that trend. So that was an external circumstance that anyone in this industry had to deal with. So the question is not, how do we make it not happen? It's what are the most strategic and beneficial moves we can do in a contracting MNAV environment for long-term success? And that's the mindset of, I think, an entrepreneur and being an operator. especially in a high volatility industry, of like just continually looking at what's in front of you and incrementally adding value over time.
I think that long-term perspective is key, and I'm glad that you brought it up. I think we can leave it on that note. I thank you so much for coming on the show. I really enjoyed the conversation. Hopefully, the audience will find this deep dive to be as interesting as it has been. Where we could keep talking for hours, maybe even days or weeks on these topics.
Yeah, this was great. Thank you for having me
Where
on,
can folks
guys.
find you, Steven?
Yeah, so I'm on obviously on X a lot of the time. Steve, just look up my name on there. DMs are open, very active. David as well, and the Nakamoto handle just at Nakamoto. We've got our website. I think official press releases. It'll all come through the official handle, as well as standard filings for institutional investors. And stay tuned. We plan to be very active.
All right. Thanks, Steven. Looking forward to having you back on as the Nakamoto story unfolds. And thanks to our audience. Don't forget to leave a review, leave a 5-star rating on our show, and we'll see you on the next one.
See you guys.